Hello, everyone. I am super excited to have you here today. This is our webinar on how to trade the energy market. This is IronFX. My name is Angelos Zitis. I'll be helping out. I'll be the host of this webinar. I'm so happy to have you here with us, and I hope you get the best information out of this webinar. For all our participants, I would just like to say that you can place your questions and your ideas here in the chat session and in the chat section, and I'll be happy to follow up and have a conversation with you guys. And any ideas or any questions that you might have are truly welcome. Now, the title is How to Trade the Energy Market. So let me get into this intro, and then we'll be going over the instruments. So the importance of the energy in our lives is confirmed on a daily basis. Our needs for fuel, manufacturing, industrial, factories, and trade, along with others, is part of our everyday life experience. Now, this webinar will cover a mix between energy commodities and some of the most popular energy companies in the world. In this discussion, we will also include challenges and opportunities that relate to the energy sector in order to provide a more holistic approach. Finally, we aim to provide market participants with critical information needed to trade the energy sector with more confidence. So, thank you for joining us, and we hope you find this information useful. We hope you find this webinar informative, as it is dedicated to the energy market. So our first choice for today is natural gas. Natural gas prices have risen to multi-year high levels. I would like to start by saying that this is the most perfect time to trade and talk about natural gas. Our timing couldn't have been more perfect. This is perfect. I'm saying this because it's interesting that the fundamentals and price action are responding. And the traders that know how to create a scenario and trade it properly can make a gain out of this. This is what we're seeing currently. Now, in the most recent months, natural gas prices have risen to multi-year high levels. Increased demand, specifically from China and Latin America, seems to be absorbing cargoes of gas from the US, but at the same time creating scarcity in the global market. Europe is also facing political issues related to the matter, as the US is against Russia supplying the European bloc through the Nord Stream 2 pipeline. This is a matter that we had an update just the days before. Now, the US could be against this cooperation because this could be due to competition reasons, but also due to the US possibly wanting to limit Russia's power and contribution to the global energy market. Moreover, the fact that Europe depends on Russia solely for supply is also among the possible reasons. Now, yesterday, the Financial Times and the Wall Street Journal stated that the US agreed with Germany to receive natural gas directly from Russia through the Nord Stream 2 pipelines, excluding Ukraine from the scene. As a compensation for the fees lost, Germany will be making various investments in Ukraine. If you don't understand how the Nord Stream 2 pipeline works and the fundamentals around, I would suggest you make a small research and understand how this thing works and get your own information and understand how the game is played and what the US is trying to build in terms of allies. Okay. And as a compensation, as we were saying, because they are excluding basically Ukraine out of the natural gas game in Europe, Germany will be making various investments in Ukraine. Now, a thing that was noted in this deal was that Germany has the option to enact sanctions if Russian energy policies endanger other countries in the region. Okay, so this is where the allies come in. This matter can greatly affect natural gas prices. Thus, we would suggest traders to monitor the developments on this front, as they may provide hints on further price action, possibly creating openings. Okay, so if you're a natural gas trader and you know that it's hitting all multi-year high levels, you want to know the reason. What is the fundamental? What is happening here? Ask the questions. Why is this happening? What can I understand? How are traders responding to the news? Okay, this will make you create a story in your mind, and then you will have evidence and you will have a more solid base to place your strategy, to build your strategy. Yeah, if you have a plan, it is much more um, probable to be successful than to be a random trader. You have to have a plan, definitely. Okay, so this, I would suggest you follow this story. On a different note, an interesting view by the Energy Information Administration prevailed that was highlighted in its short-term energy outlook released on the start of July. The EIA expects the natural gas consumption to decline by 1.1% in 2021 and then grow by 0.7% in 2022. This could be due to prices reaching multi-year high levels, so natural gas could be becoming a little bit expensive at this point. But as a more long-term view, natural gas is considered as a clean energy source, okay? And this can be used in getting the world to net zero emissions. And this is what, as humans, we're seeing in the future. We want to clean our atmosphere from emissions, all right? All the governments, all the organizations are coming together towards this common goal to clean emissions, zero emissions. And natural gas is a source of energy that is considered clean, so it could help us towards this goal. Okay, keep that in mind. So moving to our technical analysis, the chart that you can see in front of you is natural gas 4-hour chart. So at the moment, we are seeing the commodity trading just below our R1 4 level, which has not been seen since 2018. The strong upward momentum that was formed since the past June, noted with a red vertical line, is highlighted with the yellow lines that form. Sorry, just a second. Yep. All right, so the first line we're talking about here is the R1, which is 4. Higher is the R2, 4.20, and even higher is 4.47. Now, as you can see, natural gas has been in a strong upward momentum since the beginning of June. So it's more than a month upwards, and its reach is currently trading at levels previously seen in 2018. So as I've mentioned all the levels, overall, we believe the upward momentum is currently in play, yet the steep upward momentum seems to depend on the most recent fundamental developments we mentioned before and how market participants comprehend the news. Okay, so this is not by accident. All right, everything happens for a reason in trading. So the fundamentals are strongly supporting the price action here. Keep that in mind. So we move now to our second choice for today, which is Brent oil. We don't usually get into Brent oil, so for this webinar we chose it, and we hope you find this useful. Okay, Brent oil, the latest OPEC meeting in the spotlight is our title. Now, Brent oil prices have been on the rise in 2021 and have reached levels previously seen in October 2018 so far. Demand for oil in general has increased substantially in 2021 after intervals of controlled virus cases, okay, and the ongoing vaccination, which tends to support traveling and fuel demand. So at times we had less cases and the virus seemed to be under control, and at sometimes the virus was getting worse, and this seems to be moving oil prices. Also, demand is still on the rise as we are in the midst of the summertime in the Northern Hemisphere. In the previous weeks, the latest OPEC meeting ended with some upset as no final decision was concluded upon. However, in the past days, it was announced that OPEC members Saudi Arabia and the United Arab Emirates, which disagreed initially, reached a compromise deal over the OPEC Plus policy. The deal should unlock a deal to supply more crude to a considerably tight oil market. In the past days, Brent oil was down on fears. What you can see on our chart here is what I'm talking about. It was down On fears over the virus variants resurgence in various countries. If we're seeing the virus resurging in some countries, that means that some expectations that the world may have had in terms of economics improving, or lifestyle improving, or traveling, or like movement improving, then these expectations could be postponed. Yeah, because some countries are now imposing new lockdowns. For example, Australia, uh, in some parts, is imposing lockdowns. However, Brent oil prices move higher today, Wednesday. So as you can see, there's a small jump today with some improved sentiment by traders, even as the API weekly figure displayed a surplus last night of 0.8 million barrels. The surplus usually pushes oil prices down because it indicates more supplies in the market. But today we're seeing oil prices upwards, and that could be a contradiction to the news that came out last night. Now, please note, if you want to see fundamental technical updates on WTI, this is Brent oil. If you want to see on WTI, we are releasing bi-weekly reports and videos that are dedicated to WTI. The videos can be found on our YouTube channel, so feel free to go back and review what we've done in the past weeks. Another thing I want you to know is that with the latest drop, Brent has moved in this gray area right here, which was before June. It was in May and June, and this is a sideways range that is between, it was between our R1 70.60 and our S3 64.75. So this range could be critical right now and could be used for trading. All right. So moving to our next choice, and now we're moving to our technical analysis. So even though Brent oil has been in a gradual upward momentum since November 2020, in the past days, the commodity has fallen drastically, forcing our MACD indicator below our chart to drop to minus 1.5, implying a rapid fall. This is the rapid fall right here. Yet the recent drop has also formed our first support for the commodity, which is noted as our S1 67.85 support. The S2 66.35 is the level that could be tested lower if the selling is to persist. However, the commodity has now dropped in a sideways range that was used. This is what I was referring to just a few minutes ago, in a sideways range that was used in the past months until June between the R1 70.60, this is the area I'm talking about, and our S3 64.75 support, and is highlighted in the light gray rectangle on our chart. Now, if the buyers are to take over, then the R1 could be tested initially, while even higher, the R2 72.15 level could be a target higher for the bulls. Our R3 73.45 represents the highest level noted for this analysis. And now we're moving to our selection of energy stocks. And first we have Exxon Mobil, a strong upward momentum in 2021. All right, to start with, in the past days, Exxon announced a new chief financial officer, Catherine Mickles, which is the first woman and external hire to join the oil majors management committee. Exxon had to deal with investors' demands to shake up its leadership in the executive suite and its board of directors on expectations of better company performance, okay, and a need for improved returns also, something that may have not been achieved in the past. Now, the second important note on Exxon is that some analysts suggest that purchasing Exxon shares could help investors counter inflationary pressures in the US. According to Refinitiv, Aecon will be seeing this any minute. Exxon's dividend yield at the moment is 6.21. and the company has been able to preserve the dividend growth rate for many years going back. With the stability in dividend payments, Exxon seems confident and able to protect investors' interest in the long run, thus making it more attractive. Okay, so now let's look at the chart. This is Exxon's 1-hour chart. From the start of July, as noted in our chart, the shares price has been in a downward trend line that had steepened on the 14th of July, again, as indicated in our chart. Now, so we have one red line here, which is the start of July, and we have another small break here, which indicates the steepening, which was on the 14th of July. The selling in this case must have been excessive, as the RSI indicator below our chart had reached 11.75, which is very, very low and implies an oversold market. If the stock is to move higher, then the R157.25 resistance could be tested first. Higher than that, we have noted the R259.15, and at the top, the R361.15. If the selling persists and we surpass the S1, then the S253.05 will come into play. Please note the rebound observed in the latest session has sent the RSI indicator above 30, displaying some upward interest has prevailed. And now we move to Exxon's price performance table from Aecon Refinitiv. So Exxon Mobil is currently enjoying a strong upward momentum in 2021 and is up 35.76% on a year-to-date basis. During the most recent market close, Exxon finished the session at 55.96 previous close, and we must say that this price is not far from its 52-week high price, which is at 64.92. Okay, so it's getting closer to its 52-week high price. Another thing that is very, very important and traders should look out is the company's earnings report, which comes out on the 30th of July. And caution is advised, as the event can move its stock price accordingly. All right, analysts expect both earnings and sales figures to be on the rise compared to the same quarter last year. The expectations are based on the substantial rise in oil prices, especially in the second quarter of 2021. So we move to our second energy stock, which is Chevron. Chevron Corporation moves into hydrogen technology. In the past weeks, Reuters stated that the company was facing, I'm going to start with something a little bit negative, because we have to give you realistically what is happening, and we have to give you accurate information. So stated the company was facing an 85 million lawsuit for failing to deliver natural gas during the previous February when Texas was undergoing a freeze. It remains to be seen if this case will have impact or not on the company, as this is a matter which is still in its initial stage. Also in the past week, Chevron announced a memorandum of understanding with Cummins Inc., a worldwide leader in power and hydrogen technology. This move is set to assist Chevron on its decarbonization activities, which is obligated to, but also turn the market's focus towards cleaner energy. Again, we see cleaner energy coming in general. Hydrogen is a source of energy that requires development, but most importantly is cost effective. And for this reason, demand could be on the rise in the following months or years. Generally, the collaboration is considered positive and promising in our view, as clean energy is also among the top priorities of the Biden administration at the moment. So we move now to our technical analysis. This is Chevron's 1-hour chart that you can see. Very characteristic is the stop on the S1 94.50 level, while the rebound upwards and retesting of the R1 98.3. So there was a stop on the S1 and there was a rebound just below the R1 98.3. Tends to point out that investors may be feeling it's time to buy back. Yet, if the downwards move continues, then the S2 92.75 support is possibly next for the bears. Even lower, the S3 90.05 could confirm a breakdown for the stock. Please note, 1 second, please. Yep. So please note, BP is already trading at levels previously seen in February. So this low we're seeing here is a February low. If a reversal is to take place, then the R198.30 could be the first target for the bulls, as we said. Orders may also be increasing above that level if the market is to reach the R2 101.55. A change in momentum, however, can be achieved if the stock reaches the R3 104.45. And as the share is in a downward trend, the Bollinger Bands that we can see right here on our chart may be hinting that the selling is not over yet, as the middle line remains above the price action currently. So please disregard these levels right here and focus on these levels. As we just finished Chevron's part, we move to the price performance table. Chevron Corporation is currently up plus 14.30% on a year-to-date basis, while its most recent close was at 96.53. Its 52-week high price is at 113.11, and its lowest is at 65.16, which is approximately a $48 range and is wider compared to Exxon's. Chevron earnings report will be coming up on the 30th of July, and caution is advised as the event can move its stock price substantially. So we move now to BP, British Petroleum, making moves with clean energy. Okay, so a move towards clean energy was also announced by BP in the previous days, which indicates the energy firm is moving into new horizons within the industry. BP announced a collaboration with Sempra LNG, and Infrastructure Energetica for the delivery and receipt of the company's first carbon offset liquefied natural gas cargo. As we noted in the natural gas section, demand for the specific fuel energy is currently rising. Thus, this is a smart move that can support the market instantly. Moreover, news through the official BP website suggests that the company is also involved in offshore wind power projects nearby the Irish Sea. So they're moving into liquefied natural gas cargoes, but also they're moving into offshore wind power projects near the Irish Sea. For this project, BP will be collaborating with Energy Baden Württemberg, which is a German energy company. And this project is another move toward clean energy and aims at covering millions of UK households in terms of energy needs. Okay. And we are now moving to our technical analysis. BP's latest drop may have been cleared as the RSI indicator below our chart moved from below 30. So you can see this drop below 30 and it's now moved above 50. And this is the upward movement that you can see right here. This move has led to the R1 289.10 being tested but not breached to the upside. Higher, we have noted the R2 294 and the R3, of which some sideways movement was observed among these levels in July, proving traders tend to keep them in mind. In case the downward trend persists, then the S1 275.5 could be engaged once more, as it did previously when the support was formed. Lower, the S2 270.90 can also be tested if the bears are to dominate the scene, while the S3 264.25, which is down here, is the lowest level we had identified for this analysis. However, to reverse the current downward trend, we would like the stock to break outside the upper boundary of the descending channel noted in the white lines on our chart. So we would like the chart to break above our R2 294 in order to reverse this downward trend that we're seeing, at least to get some evidence that it's currently reversing. And we move now to the price performance table for BP. BP's share last closing was at 280.15, and at the moment the share price is up 12.55% sorry, 58% on a year-to-date basis. BP's 52-week range is between 361.71 and 188.52. This is a big range, and this could be the biggest that we will be giving you in terms of the stocks. Speaking only about the energy sector stocks. BP's earnings report will be coming out on the 3rd of August, and caution is advised as the event can increase volatility for its stock price upon release of the figures. So in the next 2 weeks, we will be having earnings releases from Exxon, Chevron, BP, and these companies are very, very interesting. They're very, very, very interesting, and a lot of people will be monitoring the happenings on these companies and their price action. So as a conclusion, there are some things that I would like to note before we get into some questions that you may have, or identifying what you would like to go over again. So first thing that I would like to note is that the S&P's oil energy sector currently this month has been down by minus 11.56% in July. Okay, but on a year-to-date basis, the S&P's 500 energy sector is up 25.90%. Okay, so July hasn't been so good for the energy market at the moment. Okay, but overall, the energy sector has improved in the first half of the year, and so far overall in 2021. So keep that in mind. This is telling us that July has been a rather difficult month for the energy sector, and but overall it's still performing well. The second thing that I would like to note is that the correlation between oil prices and energy stocks in general, let's take it in general, energy prices and energy stocks, the correlation between them is obvious, okay, and should be considered at all times. All right, very simply, when energy prices rise, energy stocks will be on the rise, and the opposite. When energy prices drop, energy stocks will also drop. Okay, now this may not happen at all cases, but 95% of the time this is what will happen. Okay, we got that out the way also. Another very important subject as a conclusion is Biden's plan on green energy. Now, this is a huge plan. All right, they're investing money into this, and I don't believe that these companies that are currently producing oil will be left out of the game. No, they will be investing their money in this clean energy, in green energy. Okay, so the companies that you are seeing are most probably to be seen in the future if they invest properly in clean energy. And this is what their plan is, because this is what the rules are at the moment. This is what governments are trying to do at the moment. The biggest organizations in the world are moving towards this target at the moment. Okay, so they have no other choice. If they want to play this game, they have to move into cleaner energy. And that's what we've noticed also with BP, Chevron, and Exxon moving into cleaner energy, doing projects in cleaner, like hydrogen, or moving natural gas cargoes, or moving into offshore wind power projects. This is what they are currently trying to do. Okay, so this is very important. We're generally seeing a lot of people moving into greener energy on other things like greenhouses and and electric cars. That's another thing that is also connected in a way to the energy sector. But in order to get started on this, it takes time. This is not a project that we see in the next month, in August or in September. We could be seeing this go from 22 to 23 to 24. I mean, in the next years, and it will progress gradually as we take a step-by-step movement to this, because cleaning the environment and moving into cleaner energy is not as easy as one would think. All right, So you have to make it affordable for everyone in order to be able to use it, or you have to make it accessible to everyone in order to be able to use it. So this is very important. Please consider green energy and how these monitor how these companies are moving into new projects. Okay, because these updates that we are getting can move prices accordingly. Yes, as I said, the energy market will depend on energy prices, but also we have to monitor what the projects are and what the expectation and what they're trying to manage, what they are contributing to this bigger plan of changing the world. Another thing is that COVID-19 has basically damaged a lot of oil producers, especially in the US. Especially in the US. And that's why in my opinion, we're seeing mostly the OPEC Plus group dominating the oil market at the moment, because we're not seeing a lot of action from US producers. But at the same time, US producers are now making moves. They are up on a year-to-date basis. All the companies that we talked about are up, so they could be making a comeback. So there's a lot of things that are changing very fast, and even as the variants are surging out there, a lot of people are being vaccinated. A lot of people are traveling. A lot of people are moving through this. They're getting things, trying to move things. Things are better than they were months ago or in 2020. Keep that in mind. That is important also. In general, what is happening with in terms of how to deal with the virus is also connected to the energy market, because more fuel is used and demand for fuel is also increased or decreased accordingly. And that's it. If you have any questions, or if you would like to place ideas in the chat, then I'll be happy to take this and have a conversation with you people. If not, I would like to say thank you very much for your time. Thank you for attending. Thank you for listening to this webinar. We have more coming out and more information, and we're trying to support traders even more by giving you information on different sectors that are currently trending. So keep an eye out for this. We hope you enjoyed it. We hope you found this useful. Enjoy your day, and we will be seeing you very soon. Thank you.